and it's my pleasure today to welcome you for a session on battling payment fraud. We are looking at key measures that financial institutions can't afford to ignore. And for this session, we are welcoming industry experts from SWIFT and from Eastnets, who will share with us the latest key insights on cyber threat landscape, but also share the latest measures and technologies to adapt to new payment fraud patterns. Before we start, I'd like to remind you that the session is being recorded, that you may submit questions anytime in the chat during the webinar. We have also set aside 10 minutes at the end of the session to answer your questions. And obviously, we will collect all your questions and answer them by email, and as well with a recording of the session. So for this session, I'm pleased to welcome Rajeskar Kar. Raj is Head of Solutions Architect Technology Enables in the Middle East, Central and South Asia at SWIFT. Raj has more than 12 years of technical experience in companies like IBM, Citibank, SWIFT across regions, Asia Pacific, Europe, and Middle East. He has a sound experience in consulting, project management, solution architecture, pre-sales, with a clear focus on payments, IT security, APIs, identity, interfaces, and integration. So welcome, Raj. And then we have also from Eastnets, Atala Nijmet. Atala is a principal product manager focusing on anti-fraud solutions at Eastnets. Atala combines more than 14 years of experience in the financial solutions industry, developing solutions in core banking payments, anti-money laundering, but more recently in fraud prevention. In his current role, Atala is also responsible for the continuous development of anti-fraud solutions to help financial institutions to analyze, detect, and prevent fraud using the latest artificial intelligence and machine learning technologies. So welcome, Atala. So to set the scene, let's look at what is the industry trends and challenges today. So today we are all focused on a variety of digital channels for payments, and we have also instant funds transfers and cloud hosting capabilities. These are the main challenges and innovations which are becoming the norm nowadays. Though we know very well the benefits of these innovations, they are posing a certain numbers of issues in terms of increasing complexity of the workflows, and they break the enterprise security boundaries typically. That brings a lot of vulnerabilities in the infrastructure and the ways to process payments that are really sweet spots for fraudsters. Fraud levels are then exploding for the moment. Different modus operandi are happening, the most common of which are stolen credentials to impersonate the account owner and proceed with genuine payments or credits. For example, you can take over the authorized push payment with stolen credentials, fraudulent changes of the beneficiary account on payment terms in invoices, but also in individual payments of bulk transfers or even letters of credit. So what we see is an increasing number of fraud techniques, and they hide from typical hidden attacks like brute force attacks, software automation, injections of malware that redirect with counterfeit websites, keystrokes hacking, and it's evolving subtly to a more subtle identity stealing situations, which are based on relationships, credulity, and ignorance of people, which are giving their credentials for their identity through social networks, phishing, scams, or email injections. Based on this kind of situation, regulations, more specifically critical market infrastructures like SWIFT, are taking measures and enforcing these measures over years to protect consumers and enterprises' assets, but more specifically also to preserve the stability, the trust, and the reputation of the financial sector. These measures come through different types of areas which are technical, like a stronger customer authentication with multi-factor authentication methods, but also mandatory data encryption across the entire flows, the obligations to monitor transactions, perform risk management, and report suspicious activities. And more recently, the regulations are mandating, for the context of instant payment, the validation of the beneficiary's name with the account number, which is called also confirmation of payee. Obviously, awareness on fraud techniques and also awareness of risky online behaviors are key and become a key topic for regulators and also SWIFT in order to maintain campaigns and provide some education in combating fraud. This being said, the fraud methods that I mentioned earlier typically are very easily detectable. So they leave clues in the infrastructure of financial institutions. They are easy to detect and report, and criminals are now creating more scenarios, more sophisticated scenarios to get undetected and pass under the radar of the detection teams, of the fraud detection teams. They use intermediaries like money mules to transfer funds with a commission, or creating fake identity, synthetic digital identity to get access to credit illegally. And they even multiply the fraud attempts through different types of channels and use generative AI, which is very easy to create fake identities. The results for financial institutions definitely an extension of the security perimeter beyond their own profiling of transactions in terms of profiling much more the identity itself. And it gives them the sense that they have a very unclear risk assessment process. And it gives them also a very high level of challenges to detect the fraud because it's quite complex to detect. So taking into consideration the current situation with this kind of sophistication in terms of fraud attacks, I'm turning myself to Atala, and I can imagine that this requires enterprise approach to fraud prevention and detection. And I would like to see, Atala, if you can elaborate on Eastnet's holistic approach to fraud detection as well as the underlying technologies.
Yes, indeed, Maria. Thank you for the introduction and good day, everyone. Thank you for joining and tuning in to our webinar today. So extending to what Maria just described in terms of I would say, the threats and the challenges that are being faced by financial institutions and financial services generally, as well as the continuously growing regulation. Zooming into one of the main, I would say, streams of fraud as a target for fraudsters. Payment channels can represent a large deal of what is being targeted by fraudsters. And judging from the several interception points that might be attacked or might be controlled, on the other hand, by financial institutions, starting from the customer interfacing channels like the mobile banking, internet banking, which can be subject to account takeovers, which can be subject to fraudulent activities, as well as other channels that might be also open for end customers, end clients of those financial institutions to interact and use the services that is offered by those institutions. So this creates multiple interception points along the track of or the pipeline of processing payments, and this has to be taken into account. Initiating, for example, a transaction that will end up as a SWIFT message or a transaction that will go towards a certain network, that will require us to have multiple controls that will execute along the way, and we can control the risk at each level differently. This can include core banking applications or initial interception points like the mobile banking, internet banking, or even before the transaction leaves towards the network. And some of the controls will execute in I would say, a retro manner that will be considered as post fact. So considering all the risks that we might want to cover, each level can have its own risk. And fraudsters can get into the cycles in different ways, shapes, and forms. And currently, what is being seen the most, and as explained by Maria, the weakest point at the whole cycle can be considered the end client. That's why we see a lot of cases that that will depend on phishing attacks, on account takeovers, or even social engineering. Moving towards the controls and how can we build an effective, I would say, fraud detection cycles. That starts basically with the data. So the data represents everything. We depend on the data to analyze what is happening, who is doing what, and having a standardized approach towards the data can link to a better way of analyzing the data, linking it together, and building a more of an effective set of controls. The main point is that we want to build the controls in a way that will cover real-time and post-fact, and those are really correlated together, creating an overlap with what can be considered as a normal activity and what should be intercepted as a suspicious activity. And that includes things that will actively profile data that relates to certain accounts, to certain entities, and continuously draw the patterns and the trend lines to detect the slightest, I would say, possibility of having a suspicious activity. And that can be complete with having a large set of versatile set of controls that will cover the risks from different aspects and combine them together in order to be able to build the effective monitoring, I would say, layer that can both protect and prevent the friction that can be caused by those controls. Next slide, please, Maria. Yeah. So conventionally, I would say, and throughout the years, fraud is not like a new topic. It has been there, and institutions have been trying to cover this in several ways. And I would say the prominent approach that have been taken throughout the years is to use the rule-based approach, which includes not only rigid rules, include other things that extends a bit further with statistical or even look back, I would say, based approaches. But all of this can fall in a way or another under what we call rule-based monitoring. And that is really one of the major, I would say, techniques that have been used. This has like lots of advantages. First, let's try to summarize the points about how this can be beneficial with the simplicity, transparency, because those are mostly simple rules and those can be easily explained. We don't have to do a lot in order to be able to implement and deploy those rules. So this has like low entry barrier. Those are almost immediate to operate. So we define them, we test them a little bit, and then we push them into the production, and we can customize at any certain point of time. And that is basically mimicking how the investigators or the human will analyze a case, reverse engineer the attacks, and try to build the control in a rule form that will detect any occurrence of that particular pattern again. But this, with the continuous, I would say, complexity that is being seen with every day, that also poses a number of challenges. And that can be summarized as, first, the rules, the set of rules that we have, it has to be continuously edited, continuously audited, and this is like a burden. This is not like an easy task that can be achieved, especially if we have lots of channels, lots of traffic in terms of volume, I would say. This has to be a challenging. This will be a challenging task for any institution generally. And that will increase or grow the maintenance costs that will be deployed for continuously, I would say, assessing and continuously improving the set of controls that is being used. And in all cases, when we use rule-based monitoring, there will be always some limitation when it comes to the complexity of the controls that we can deploy. So we can make it complex to the level, and then this becomes really complex. So it exponentially become more complex when it comes to including more factors, more, I would say, patterns. That's why in the recent years and all the development that we have been seeing on the AI and machine learning, namely part, there will be a major role for those particular techniques in the monitoring cycle. And that basically enables us to take aspects of the fraud monitoring that was not really easy to implement nor available in certain cases. And that can be, for example, the automation of fraud pattern recognition. So we don't have to build rigid rules or rigid controls that will detect certain patterns. Patterns can be easily detected with automated, I would say, automated algorithms that can detect such patterns. And this will keep the controls adaptive to changing fraud tactics. So we know for a fact that fraudsters will take a new technique every day, every week. We will see new things, and we'll hear about new things that happened already at other institutions or in the news. So it is extremely important to deploy things that will be adaptive to, I would say, fraud tactics. So fraud tactics changing, we have an adaptive control, and that is basically enabled by having a more in-depth, I would say, analysis of the data. We can recognize new patterns that was not even seen before without even considering to detect those patterns. That's the power of having an adaptive technique. And in terms of how we do it, this is easily scalable because things will relatively be easier to manage when having the algorithms doing the heavy lifting for us. And that will enhance the scalability, basically. So describing the layer that will depend on AI in such way also brings the enablement part to the discussion. So what I just described is a good thing, but what does it enable us to do? So first, the efficiency of handling large set of data. So when we deal with rule-based controls, we have a limitation when it comes to dealing with huge lists. We almost have to execute those as always in a post-facto mode, and this will also be a complex, I would say, job essentially. With AI, this will be much simpler, so we can handle much larger set of data. We can uncover hidden patterns that was not seen before, and this is a major benefit that we will gain with the usage of AI. This will aim to improve the accuracy of our fraud detection layer generally, and enable us to stay ahead of the fraudsters. So basically, as we started with the description of effective fraud monitoring controls, the aim is to have the highest rate of fraud detection with the lowest rate of friction that we can offer as a fraud control layer. So with the adaptive techniques, with having more safety, I would say, layers that will enable us to build those controls in a more of adaptive way, this will help us also to decrease the friction that might be caused by fraud controls, which is the case with any layer of controls that we build for fraud or for any other purpose. As an example of the models that we are talking about and how those can be designed in a way to consider risks on different levels and to recognize suspicious activities in a different ways. Starting with the single transaction, I would say, evaluation, which can be represented with a model like the anomaly detection. Such model can run in real time. It assesses transactions based on pre-trained data, and this model will enable us to basically say whether a certain transaction is suspicious or not. Other controls might help us in forecasting what will happen with certain contexts, like certain currency, certain account, certain service, certain channel. And this is also enabling us to incorporate the future, I would say, prediction within the controls that will assess the current time, right? So when we evaluate a certain relationship or certain, I would say, channel or certain profile risk, we can also include what we expect this particular entity to behave like and what is the deviation from that particular behavior to assess what is the level of risk that we are exposed to. And other controls can depend on the behavior itself, the behavior of the entity. This can be a user of a system, this can be end client, this can be also a correspondent bank. And we have, like, for example, several models that will cover such area in different ways, some of which will be used in real time. Other models will be considering the risks and profiling it in a post-facto mode. And also, this can work on the action level as well. So it's not only financial transactions, it can also be the non-financial transaction that is combined with other non-financial transactions or financial transactions with the different time frames that we look at in order to assess whether a certain behavior or a certain sequence of action or a certain, I would say, the transaction is part of a suspicious activity. And that can represent an early warning that will enable institutions to both detect and react to fraud while it's happening, or preferably before it even happens, and cause financial losses. With this, I believe that the highlights for the models that I wanted to present is pretty much covered. I would hand it over back to Maria to have some, I believe, some more insights about SWIFT and CSP, right, Maria?
Yes, thank you, Atala, for this very exhaustive explanation of the different models that are available in terms of artificial intelligence to detect fraud. Now, I would like indeed to reach out to Reg and deep dive into a specific critical channel, which is the SWIFT channel. SWIFT has been launching the customer security program from some years now, and I would like you, Reg, to remind us what are the controls, the assessment approach, and also what are the latest measures that are mandated to SWIFT to combat fraud from cross-border transactions.
Thank you, Maria. Thank you, Atala. I believe I'm audible. So sharing my screen. Okay, great. So good afternoon, good morning to all. So it's a pleasure to connect with all of you virtually and talk about quite a critical element of the SWIFT infrastructure, which is called the Customer Security Program. And Maria and Atala has already provided a bit of understanding when it comes to fraud, what is happening and how we can leverage the advanced technologies like artificial intelligence and machine learning. So today, what we are going to discuss in the next few minutes is we will start with an introduction of the customer security program, right? And then we will discuss about the CSCF, which you call it as a customer security control framework. Then one of the important element in the entire CSP ecosystem is the independent assessment framework, which each and every customer is obliged to do every year during the KYC self-attestation. And last but not the least, what are the process that is required in order to make sure that your KYC self-attestation is valid, right? To start with, when you talk about customer security program, as you all know, that customer security program as an initiative has been launched way back in 2017. Now it has become a kind of business as usual, where the customers are used to basically what needs to be done as part of the CSP is concerned. The main aim of CSP was to transform the institutional financial services ecosystem, and we are raising the bar of the cybersecurity hygiene, right? It's very important that when you are talking about a very sensitive infrastructure like SWIFT, where we are basically exchanging financial information with the counterpart across the globe, it's very important not only you but also the entire ecosystem is secured and protected, right? And that is the reason why, as you can see on the screen, we have three pillars, or rather, three divisions where we are categorizing into secure and protect. So basically, you have to reduce the risk by securing your environment, right? You have to implement the mandatory controls, and in few cases, might be the optional controls as well. And last but not the least, it's important to have an independent assessment, either by an internal assessor or an external assessor, right? The second pillar is basically we call it as a prevent and detect, right? To some extent, Atala has covered it, in the context of artificial intelligence. So it's very important that, you are putting in place the strong detection mechanism to manage the risk. Risk management is definitely a key element that needs to be taken into consideration. And you can also request your counterparties with whom you are having a correspondent relationship that, what is the level of the cybersecurity controls that those counterparties are having, whether they're attesting the CSP on a yearly basis, whether they're adhering to the controls that is recommended by Swift, and so on. And last but not the least, you have to report the compliance to the Swift security controls, right? So depending on the architecture type, depending on how we are connecting to Swift, you have to basically make sure that your KYC self-attestation is done on a yearly basis. So moving ahead, so when you talk about the key documents and the information sources, right? So as I was mentioning, CSCF, the Customer Security Controls Framework, is very important because we are raising the bar when it comes to the number of controls getting incorporated under the umbrella of CSCF, right? And then at the same time, we are also trying to make few controls mandated. For example, this year, one of the control is mandated, which is 1.5, which we'll discuss in the next few slides. So every year we are doing a bit of changes. Now, one thing which is important, those changes, Swift is not taking the decision alone. It is basically after having consultation with the global community and hearing from the community that, what exactly is required in order to secure the environment. It might also happen that more controls are being added in near future, and the optional controls might get, turned into mandatory. Then comes the independent assessment framework, right? A couple of years back, Swift has mandated the usage of independent assessment framework. Now, this framework is actually giving a kind of assurance to the community that either you're doing a attestation, which is basically, checking the execution, how you are executing the controls as part of the CSP, number one. And number two, it is also giving the assurance that someone is basically auditing the entire Swift infrastructure, whether it is an internal candidate or an external vendor, right?
So,
So
Harsh, sorry, Harsh, may I ask you to put in slideshow because it's going to be much more bigger on the bottom. Yeah, thank you very much.
no problem. Then comes the security controls, right? So here we have the controls, the principles, and the objectives, right? Now, when you talk about objectives, it's very straightforward. You have to secure our own environment, user authentication and the user controls when it comes to the limitation of the access. The person who are having access to the Swift application, those persons should have the access what they're expected to have, right? For example, if I am from IT, I should not have access which is relevant for business and vice versa, right? So the user management, the role of the security officer is very critical in order to make sure that you're maintaining the proper hygiene when it comes to the Swift infrastructure. And last but not the least, when it comes to objective is the detect and respond, which we have discussed in the previous slide. Now, if you look at the three pillars, first one is the objective, and then comes the principles. What are the 7 principles? First, and this 7 principle is related to the number of controls that, that is part of the customer security controls framework. For example, you have to physically secure the environment, and all depends on what is the architecture type that you're having, right? For example, whether you're having a full stack infrastructure, whether you're having a partial stack infrastructure connecting to a service bureau, whether you are using a cloud solution. So depending on exactly how we are leveraging your infrastructure and connecting to the Swift, those principles might be relevant, might not be relevant, right? So this is pretty important. Then this is again a very interesting kind of kind of figure, which will give an impression that from the word go of launching the CSP program way back in 2017 versus what we are having today, right? You can see that the number of cases when it comes to cyber threat, when it comes to the fraud, has reduced significantly. right? Which is a great thing to have because that gives us an impression that, and even if you look at the compliance percentage per year, on an average, it is close to 95%. So that means that customers are trying to adhering to the controls, which in turn means that they are getting the value, they're understanding the value, what they will achieve and what is the ROI of that, of that execution process or the investment that they're providing in order to maintain and secure the infrastructure. What is the return on investment, right? Whether it is adding any value to the infrastructure and how we are getting to those conclusions, those number that you can see on the screen definitely has a direct relationship with the value that the customers are getting from the CSP, right? So the only recommendation that we would like to have or give to the community is that, try to do what you're doing in the past, right? So please continue doing that. And we will be very happy to see that compliance control reaching very close to 900% instead of 95, right? But whatever is happening across, and these are global figures, whatever is happening across the globe and what we are seeing in terms of, the cases, it is reducing significant, which is a good sign. Now, again, it's important to understand the role of Swift here. Sometimes there is a bit of misconception, from customers and from other stakeholders as well. What is Swift supposed to do and what is Swift not supposed to do, right? Definitely, the definition and evolution of the framework in collaboration with the community is something that Swift is doing on a yearly basis, right? Every year in the month of July, we publish the CSP for the next year. The rationale of doing this is because we would like to give the community a period of 18 months, okay, from July this year to the subsequent year till December, so which is a 18 months period. And within that 18 months, you can basically get the time to plan, first of all, plan, budget if required, and then execute it, right? Then Swift is also responsible to provide you the tools. KYC self-attestation is one of the example which Swift is providing you in order to basically attest, your controls against the CSP. And you have to do it on a yearly basis as well. Validation is done by Swift. For example, if you are providing an architecture type which is not in line with the CSP guidelines, then definitely your attestation will be rejected, right? And you will be contacted in order to change the architecture or revisit the architecture which you have submitted. But what Swift is not supposed to do is basically analyze their assessment report, right? Because Swift is the one who is defining and evolving the framework, so we cannot analyze it, right? So we are basically trusting you as a customer, as a financial institution, as a corporate, to do your due diligence, number one, to do the internal or the external assessment in line with the guidelines provided by Swift, and then submit the self-attestation, right? Now, that is the reason. One of the reason is that, the self-assessment, which used to be in the past when it comes to KYC self-attestation, is not accepted anymore, right? So IAF, which is Independent Assessment Framework, is something which is mandated. Then comes the CSCF. What is in scope and what is outside of scope? Sometimes we have seen, based on the customer engagement at a global scale, is that, there is a bit of confusion here. I'm using a Swift infrastructure of, many interface components, which is integrating with many downstream applications. I'm having a compliance application. I'm having a archival application, recon application, etc. Now I'm a bit confused that which architecture type I'm having, right, in line with the CSP, and also at the same time I'm a bit confused that what is in scope and what is outside of scope. So let me clarify that when it is basically about in scope components, all the Swift specific components within the production environment is in scope, right? Then what is outside of scope? All the third-party application. It can be a downstream application, back office, payment hub, etc. So this is something definitely is not in scope of CSP, right? Now, I always, tell our customer is that, if something is out of scope of CSP, that doesn't mean that you have to neglect that, because you need to basically take into consideration from the moment the payment is generated or a transaction is generated till the time it reaches the Swift network. All the hops that are there, in the payment processing stage should be taken into consideration from a security perspective, right? Starting from the data exchange layer, starting from the work workstation, starting from the back office, starting from the channel that you're using, all those hops, multiple hops which is involved in the transaction process has to be secured, right? Of course, from CSP perspective, we are only catering to the Swift interface components, but in general, you have to take care of the entire infrastructure. Now, I will not go into details. So these are all the controls, and we have in total 5 architecture type, right? A1, A2, A3, A4, and B. A4 is a new addition to the CSP family, which is called a customer connector. The reason is that, for example, if a customer is not using any kind of interface components and is only using a connector, within the back office, or, it can be any kind of connector, then in that case, that specific customer type will fall under A4, right? So, and depending on the architecture type that you're using, the number of controls that you need to execute as part of CSP is gonna change as well. Okay, lower the footprint, lower the number of controls that you need to execute. So this is all about the architecture type A1 to B. For example, if you're using all the components like the messaging layer, the communication layer, the network layer, the security layer, all the layers are hosted on premises, definitely will be A1. Then you have only the messaging interface connecting to cloud. From a connectivity point of view, a messaging interface connecting to a service bureau. So all this kind of architecture falls under A2. Then you have, if you're connecting to the Swift cloud, whether you are having integration in the back office, so this will fall under A3. And then, as I have mentioned, if you're using a kind of customer connector, it can be a middleware server, it can be anything. In that case, it will fall under architecture A4. And if you're not using anything on your premises, only using the web browser, graphical user interface, or a client, in that case, it will fall under architecture B. Good. Then, as I was mentioning that, this year we have made control 1.5 as mandated, right? So this is very important to take into consideration, because it has to be taken into consideration at the time of submitting the KYC self-attestation this year. There are a few editorial changes and clarification, which is important for you to understand as well. All of you might have heard about the new HSM boxes, which is called Luna SS7 model. So in that HSM boxes, we are not providing any PED, which is the pin entry device, right? So, this, when you will go live with those set of HSM boxes, you need to make sure that whenever you are accessing the HSMs remotely, the channel of communication is secured. You are also aware of the central RMA management portal, right? So all this communication to the central portal, to a portal which is hosted on the cloud, you have to make sure that you have all the required controls in place whenever it comes from a workstation perspective, whether you're using a jump server, whether what kind of MFA or the multi-factor authentication you are using, etc. So all this needs to be taken into consideration with all these new strategic initiatives which is coming, right? Then the independent assessment framework. So when it comes to the independent assessment framework, it's very important that you submit your attestation on or before 31st of December 2023, right? This is very, very important. And this is something that, that is a continuous process. It's a recurring process. And as you can see in the bottom of the screen, from July 2023, which is already published, when it comes to the CSCF 2024, there is a time period of 18 months, right? Within which you can plan, you can budget, as well as, you can basically plan the execution of certain controls which needs to be implemented. Now, what are the types of assessment? One is the internal assessment, independent assessment framework internal, independent assessment framework external, right? Now, if you are going for the IAF internal, then you have to make sure that the person who is basically in charge of the assessment, he or she should have certain security certification. Everything is mentioned in the documentation guide, and all the recommendation is also mentioned over there as well. When it comes to the Swift mandated assessment, so this is something that Swift has the control. So that means that, Swift can reach out to you and request you that, you are basically requested to have a mandated external assessment. So, in a year, it can be a mix of 100, 150 customers globally, where Swift reaches out to those customers and requests them, can you please have an external assessment from a vendor, right? It can be any audit firm, it can be PwC, Ernst & Young. I mean, it can be anyone, right? So there is a directory in Swift.com as well where all the vendors are published. It's up to the customer to basically see which vendor suits their needs, their business requirements, and the need for CSP as well. Now, what is the typical CSP process, right? When it comes to the independent assessment framework, first, you have to select the assessor, right? Now, this assessor depends whether it is an internal or external. Then the assessor conducts the review. We are providing you the templates. These are all published in Swift.com. And you can actually leverage those templates in order to basically, conduct the review of the CSCF. Then the results are reflected in the KYC self-attestation application, right? So you have to basically make sure that all those observations, feedback, remarks are incorporated at the time of submitting the KYC self-attestation. And last but not the least, you can be non-compliant as well, right? So if you're not following point number 1, 2, and 3, end of the year, there is a high probability that you will be non-compliant. It can be related to, you have not done the IAF, you have not implemented certain mandatory controls, etc. In that case, you are basically risking your infrastructure, which we do not want, right? Because you have to make sure that the entire end-to-end process from an infrastructure perspective is secure, right? It can be the data channel, it can be the channel of communication, it can be an interface component, so on and so forth. Great. Now, when it comes to the KYC self-attestation, I'm pretty sure that you are all aware of the screenshot of the, the application that is demonstrated on the screen. You have to basically choose the architecture type, which is very, very important. If you have any kind of question related to architecture type, please raise your voice. This is the time that you can ask any questions, whatever you like. Then you have to basically give an explanation of, whether you have implemented the control, whether the control is mandated, whether it is optional, and so on. Then there are 3 main conditions to be compliant with CSP. Attestation is published and valid in time. This is a straightforward one. You are compliant with all the mandatory controls. It doesn't mean that you have to neglect the optional one. Sometimes what happens is that a control can be optional, but it is very relevant to your infrastructure in order to secure the data exchange layer, which is basically control 2.4. Though it is optional, you can think of securing your channel of communication with the downstream application, right? And then you have number 3, the attestation fully supported by an independent assessment, right? Self-assessment is not compliant. This is very, very important. So sometimes what customer do is that, they take the self-assessment, which unfortunately is not compliant. Then what is the impact? Of course, there is a higher risk of attack if you are not complying with the controls, right? Reputational impact as well, because sometimes counterparty can see that you as an institution is not compliant. And last but not the least, breach of the CSP policy and the SWIFT terms and condition, right? Regulatory report is also important because sometimes regulator come back to SWIFT asking for all the compliant banks within their jurisdiction. So it is not a good sign that if your institution is not compliant with certain controls of CSP, right? So please take it on a very urgent basis and make sure that you are basically submitting the KYC self-attestation on time. These are all the available documentation which you can find in Swift.com, right? In Swift Smart as well, which is an online training platform. And definitely you can reach out to us as well if you have any specific question. With this note, thank you so much, and I will leave the floor to Maria. Thank you.
So thank you, Reg. Just to summarize a little bit the session. Let me switch back to our session here. So we have seen that, and thank you, Atala, as well. So we have seen the global increase of digital channel threat sophistication, and it's more and more difficult to detect with traditional methods. Obviously, regulators and market infrastructures like SWIFT are promoting the use of additional controls as part of the SWIFT security program. And we have seen that over the last 6 years, the impact is quite impressive. Now, it's true that assessment of these controls should be done by independent assessors like Eastnets. And definitely, we see that we need to support these different controls, like the Control 2.9, in products like the Payment Guard service of Eastnets. So the solution for financial institutions is definitely not limited to the controls that are available in the different types of networks like SWIFT or even the regulations requirements. They require really companies and financial institutions to have a broader view, an enterprise view on all the different types of aspects of the transaction, and not only transaction data, but also profiling on the account owner and information that are related to other types of data concerning the transaction itself and the owner of the transaction. That requires really the need for financial institutions to create a digital footprint for each customer, and they need to join the dots between the different contextual frameworks related to the transactions and to the customer itself. For this, obviously, there is a need to combine different types of methods that combine the different events that are coming from the interfaces themselves, but also events that are coming from other types of channels, to consolidate these events on transactions, behavior, and broader linkages, to be able to self-calibrate these events and adapt these events to new fraud scenarios. And this is possible through tools like Payment Guard, where we can get a unified view and centralized view of all this aggregated data within a warehouse, which is centralized across the institution, and using technologies with such as artificial intelligence and machine learning, as Atala has explained earlier, can help to cope with extremely large volumes of data and help the financial institutions to reduce the cost of investigation and fraud control, but at the same time limiting the friction with customer experience. So with that, I would just go through the session of questions and answers that we have from the people. So I would like just to ask the first question to Atala, and this question concerns much more the usage of artificial intelligence and machine learning models in fraud detection. I know regulations are very keen on looking at what is related to the explainability of these models. Can you elaborate a little bit more on this question?
Yes, indeed. Sure, Maria. Thank you. On this regard, machine learning, until the moment, maybe there is a general depiction that to a certain level, there might be no, I would say, sufficient explainability, but this might not be the case for the majority of the usage of machine learning. And this comes into play how we design and how we integrate algorithms like machine learning into the process. This has to be designed in a way and implemented to incorporate itself into the existing processes and controls, and it has to be designed in also a way to take into account the aspects of the alerting that it will be doing. And for instance, it's not only that we built machine learning models to detect suspicious activity, we also built machine learning models to explain what was produced by the other models. So basically, this is a whole cycle that will integrate together and come up with a result that will be both explainable and predictable at the same time.
Mm-hmm. Thank you, Atala. So I have here a question for Raj. What is the impact of not being compliant for the CSP?
Yeah, thank you, Maria. Thanks for the question. I think this is already covered in the slide, but I will reiterate as well. So if you are not compliant with CSP, the first risk that you're having is you are basically having a reputational risk. Why reputational risk? This is due to the fact that your counterpart with whom you're having a business, right? So they can actually view the attestation whether your institution is compliant or not. Number one. Number two is that you are basically risking your infrastructure, right? Because it contains financial messaging, right? So if your channel of communication or any interface is not compliant, and if there is basically a risk of having any kind of fraudulent activities which can happen within your infrastructure, so definitely this is a huge risk that you're taking, right?
Mhm.
So long story short, what I would rather recommend is, at least the mandatory controls are the ones that you should take into consideration. If you want to go beyond that, please do. Please also take into consideration the optional one as well, if required, if relevant for your infrastructure. And last but not the least, not only the Swift infrastructure is something that you have to take care of, right? The entire ecosystem of the end-to-end payment processing, you have to take the entire ecosystem into consideration as well. Thank you.
Mhm. Thank you, Harsh. I have another question for you, Atala. So I understand that Control 2.9 in the CSP is mandatory. So what are the things that we, Eastnets, are implementing in our products to support this control?
Indeed, as highlighted by Raj and Maria, the importance of implementing and complying with the CSP controls, namely for the Section 2.9, which became mandatory starting from this year and will be subject to the audit. At Eastnets, Payment Guard do offer a set of controls that is designed specifically to cover the scenarios that is required by CSP 2.9, and that includes multiple, I would say, levels, designed models that will be offering the required controls and required analysis to be able to intercept and detect the activities that will be targeted by the Section 2.9. The 7 different requirements are fully covered within the package that we offer as part of our general payment, I would say, fraud detection library. And for Section 2.9, this is something that we have built over the past period, and we have refined and tested with several of our clients, several clients from our client list, in order to make sure that we are fully covering the required controls and required interception points.
Mhm. Okay, thank you, Atala. I have another question for Raj. What are the qualification requirements for the assessors? Who needs to validate them? And if you outsource the hosting and operations of CSP components, do you need to resubmit the attestation?
Yeah, so thank you for the question. So what are the qualification requirements of the SSR or the external? The SSR, whether it is an external or internal, right? The lead SSR must hold at least one industry relevant professional certification. This is very important. And if I have to give an example, it can be CISA, CISSP, it can be ISO 27001 or similar, right? Swift doesn't provide an exhaustive list, but when you talk about industry certification, I think it's more or less a standard. Now, when you
Mhm.
talk about whether the internal assessment is valid for a year or 2 years, it's valid for 2 years. However, if you're doing an external assessment, it's valid for 2 years. However, every year you have to make sure that the delta of that specific list of controls needs to be executed, right? For example, if we have X number of controls in 2023, and if you are having X plus 1 in 2024, so that means the delta needs to be executed and implemented and provide all the relevant, justification of the execution of the control during the submission of the KYC self-attestation. Thank you.
Mhm. Thank you, Harsh. I have another question for Atala. So typically, when we use different types of models in AI, you need the supporting of a data sources databases. So what is the recommendation from Eastnets in terms of kind of integration needed for these aspects? How do you see this in terms of data availability and data lakes?
Um, well, I would say, Maria, for this particular point, this varies and depends on the infrastructure itself. So each particular setup can be a bit different with different technologies, maybe the existence of legacy systems. Um, so at Eastnets, what we offer and what we do is to have a separate derivative of the data that we would use for analytics, and that can depend on several, I would say, technologies, including conventional, I would say, relational databases as well as non-structured databases. Each will participate with a different, I would say, speed and different time frame, and will enable us to create even further derivatives for the usage with models, for training the models and usage for real-time, I would say, assessment. And basically, that particular setup is isolated from what can exist at each particular, I would say, FI site. And availability of data, as I mentioned, this depends on the setup itself. So different banks can have different setups, and one of the things that might be that require, I would say, a little bit extra effort is dealing with legacy, I would say, data repositories, which might require extra effort from the FI to prepare and inject the data into a solution like payment card, for example.
All right, so I understand that this is some kind of infrastructure that is able to read both structured and unstructured data. Is that the case?
I would say in most cases this might be a requirement. Yet, as I mentioned, Maria, what we are doing is to assess with that, trying to isolate the analytical layer that will assess the controls in a way that will do a great part of the heavy lifting, I would say, from the infrastructure that is being managed by the FI as that part of the solution that we offer.
Okay. Perfect. I have another question maybe for Raj. What are the criteria to have a valid and compliant attestation?
So there are three main conditions to have a valid and compliant attestation, right? So the number one is that all the independent assessment is performed, right? Self-assessment is not compliant. Number two is that all the mandatory controls are complied with and it is confirmed by the assessment and submitted in the KYC self-attestation. And number three is that, for example, if you're doing a delta assessment, or if you're having an external assessment or an internal assessment, right, all the relevant information has to be submitted at the time of submitting the KYC self-attestation. So I believe these are the three areas or the three main conditions that needs to be fulfilled in order to be compliant and make sure that it's a valid compliant, right, with regards to the CSP. Thank you.
Thank you, Harsh. And Atala, maybe another question for you. So how do you see fraud controls in the processing of instant payments?
In the context of instant payments, where timing is, I would say, a major factor, the main point that the implementation of those controls has to focus on is the scope of the control and what would be executed when. So basically, the controls that we execute against instant payment is not that different, I would say, from what we execute against other types of payments. Yet the controls has to be adjusted and scaled to the level that it would match the required timing in terms of the processing and the TPS and the latency of those controls. And then we think about the need for certain controls with this context, because at the end of the day, instant payment, because it is instant, this can pose a little bit more risk when it comes to for the fraud perspective, and having the controls in line scaled to the level that is required, and keeping it relevant to the context that we are evaluating. Refining the scope of those controls is a crucial, I would say, part from the success of executing fraud detection over instant payments. Another point to take into account as well is that having a resilient setup, combining those controls together, might affect as well the efficiency of the control. So it's not always the case that we need to go through all the controls in order to decline or to alert against a certain, I would say, payment. This can play a part in what can be considered a flexible or an adjustable, I would say, execution of controls.
Mm-hmm. Okay, very, very well understood, Atala. Thank you. So I think we are ending at the end of the session. We are leading on the end of the session. I would like to thank you, Raj and Atala, for your contribution to this webinar, and I would like to thank you as well, the audience, for attending this webinar. As I mentioned earlier in the introduction, we will be sharing with you all the questions as well as the recording of the session, and we would like to wish you a very nice day. Thank you for attending. Have a very nice day.
Thank you.
Thank you.
Thank you. Bye-bye.
Have a nice day.